Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 27th of June. So I've seen some really good action this week with some new all-time highs being hit in some key indices, and currencies are really starting to make a move. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and we can see that the last couple of days of trading has been very, very strong. We can see we had a bit of a small lull early, and then we've seen basically nothing but pull off. We know we had the tension in the Middle East, obviously. That was a lot more prevalent over the weekend last week, but the markets have certainly recovered, and now we're pushing past this level of what we expected it to break in the first place. So, look, we hit a high of 65.5 cents, really a pretty good move, and it's still looking pretty strong. If you go to the smaller time frames, you will see that we've got some pretty good market action. All the things that we talk about every single week have happened right through over the last few days. So if you're trading the Aussie, you would have had a bonanza. You can see we've got pullbacks to the 20 moving average all the way up through that move there. And then when we broke out again, you can see there's about 5 entries there, that all of them that you could have got into. Very, very standard technical analysis, trading 101, the pullbacks to the 20 moving average, absolute classic TA. So hopefully you're able to take advantage of some of that. I feel it's still got a fair bit to go. I don't think we're finished here. Like, really, this is only on the sidelines of breaking the resistance, actually. So with a little bit more movement and a little bit more strength, I think there's a reasonable chance we can get ourselves up to that sort of 66.30 without a lot of trouble. So if you are still long or you're looking for some opportunities, I think the momentum is still strong in that direction. If we see a bit of a pullback and a little bit of a lull from here, maybe a pullback to the 65-cent flat mark, especially if the 20 moving average catches up. But a really good landing zone. I think the Aussie is doing some good things. So hopefully you're able to take advantage of some of that, because there were some really good trades on the Aussie. All right, the US dollar CAD, look, big sell-off. Obviously, really the opposite of what happened. But from a technical analysis standpoint, it's been perfect. It's been hitting the highs and hitting the lows, just like we like to trade them in between the zones. We can see here that we hit the 137.80 that we wanted as a target on the way up when we were talking about it through here. And, of course, straight away, it gave us a shooting star at a level of resistance, and then down it came all the way back to that 136.20, basically hit it right on the nail, and you should have been able to get that short, actually, because it was a pretty good short. If you look at the 15-minute chart, you'll also see a couple of really good opportunities all the way down, basically hugging the moving average all the way down, some really nice moves, and even on the way up, you can see that we had the good pullbacks all the way up to the target zone as well. So hopefully you're able to get hold of some of that, because that was pretty good trading on the CAD. So where we go to from here, I think that we look for support at around that sort of 136.20. We know we've got previous resistance and support there, so we know that it's a reasonable level of price action. I think if in the first instance, I'd be looking for scalping opportunities up to the 20 moving average. But if it fails again at the 20 and we start to trade lower below, especially if we're below the 135 sort of 50 area, we can start to target that 134.50 as the next target. We know we've got very strong support there as well. The CAD's been very, very technical, and I'm very happy with how it's going. So hopefully use all of our technical analysis rules that we talk about all the time, and I think you should have a pretty good time trading with the US dollar CAD, because it's been very, very good on the boundaries of what we talk about. So hopefully that'll continue for us and we can get some more action there. US dollar yen, look, another really good trade as well. You can see that we had the massive shooting star early in the week. It shot up, went there really, really quickly, but pulled back just as fast. It's a very, very big shooting star at a level of what we know is resistance. So after that trade, it's a pretty straightforward move that we're a very, very high probability of going short. When we have these expectations, it makes it very easy to trade and aim for the boundaries, and down it came. It basically got to that 144 that we were targeting, which is really good. So effectively, and that's a big drop. Even if you didn't get the shooting star itself, you would have been able to get the move up. There's no worries about that. But the move down was just as important. And you can see that it basically is 250 pips. So you can go to a 15-minute chart. You're going to see the lower high, lower low action. I mean, look at that. All the things that we talk about, pullbacks to the 20 moving average, straight up. And even if you're an hour chart trader, you're going to see similar effect on the way up. You can see that we were basically following it all the way through, and then on the way down, even when it had its mini pullback to about a 38.2 of that drop, it pulled back to the 20 moving average and down it came again. So really good trading on the yen as well. Hopefully you're able to get some of that. All of our favorite currencies gave us some really good opportunities this week. So even though it was volatile, we saw the moves still respect the key levels that we talk about, the key support and resistance zones, and of course the standard higher high, higher lows and lower high, lower lows. So really good trading on the yen. Dollar index is the one that's really struggling. It broke through that key zone, the point of no return almost. Now it's really shown its true colors. We can see that it's very, very difficult to see it's recovering anytime soon. We've got because it's broken the key support. That's the problem with it now. We already were in a downtrend. We knew that, but the only potential for it was that it was going to break through and maintain that level above 98. It's failed to do that. Hit the 20 moving average and down it came. It's been a very, very ordinary week for it, of course. The 97.50, which was the target we were going for, has been hit already. So look, 96.50 is the next target if it continues to fall, okay? So the one thing about this, it's been very technical. Although it looks as though it's been weak, it has been technical from a standpoint of trading. So the euro is obviously the one we want to trade, but we want to use this as a bit of a proxy for that. And you can see that there's still potential to move down to the 96.50. So if we see continued weakness, we should see a little bit more strength in the euro, but be prepared for a bit of a turnaround, and if it does, it might find 98 as the resistance zone now, and especially if the 20 moving average is caught up. But let's go over to the euro because that's the one we'd want to be probably trading anyway. And as you can see, it hit our target spot on. The 117 we were talking about the other day has already been hit, and that was always going to happen when the dollar index fell through the support, of course. So, but again, another really good example of the proper pullbacks. You can see on Monday, pullback to the 20 moving average and nothing but green for the rest of the move. And nearly 200 pips on the euro is a decent move, right? Like it's a pretty good move. We all know that. So at this level, look, we've still got 119 as a target. There's still a reasonable level above us that we can go for, but it's got a little bit of work to do, obviously, to break through that zone. Momentum is still very strong, and obviously we're in a very sharp and aggressive trend, so there's no problems with momentum. Whether it continues on without a mini pullback, the time will tell, but I'd be looking at opportunities on the, again, if you go to the smaller time frames, you're going to see a million opportunities to get in, and it's no different. Once it breaks past this level, if we do start to see a bit of a move up and momentum shifting up, look for the higher lows and just continue those up. I think 119 is probably the target now. And 118 will give it a bit of grief, but more than likely 119 is where the serious resistance is. We've got very, very strong momentum on it, so good trading. If it rolls over, I'd be looking for a pullback to around that 115.50 as the next support zone for it if it does roll over from this zone. All right, and the S&P 500, the all-important, indice, of course, approaching, basically taken out all but the all-time high. You can see it's right on it now. It's been a very, very strong week as tensions eased in the Middle East after last week's, basically volatility. You can see that we had a very, very strong week, a very big rebound. Be careful around this one, though. Like we know that we've got, obviously, there's a lot more to it than just what we've seen over the last weekend. So we want to make sure that we're trading cautiously. We are at an all-time high. Does the market deserve to be there? Is the economy as strong as it's ever been? Well, that's time will soon tell us that, but we're trading and we're only going to trade what we see, of course. So if we see a break of this level, I'd be waiting for it to test it from above as a support base. But if it does start to roll over, we know that we've got the 20 moving average to aim for and potentially the 6,000, which is 150 points away in several percent. They are the two main targets, but I would be very careful around this level, okay? I wouldn't be rushing in to try and jump in on long because I think there's still quite a bit of headwind in front of it. I think it wanted to reach the all-time high. It's got there now, and I think it's time to trade very cautiously on this one. Keep the trades relatively tight and stop losses on it because it can be, volatility can return very, very quickly in the S&P, especially given the economic outlook that is still far from stable. So we'll keep an eye on it. Okay, so I hope you've had a great week's trading. We've seen some really good opportunities. Hopefully you're able to take advantage of some of those. Have a fantastic weekend, and I look forward to seeing you all next week.